Hey guys, Ripple. Essentially, I'm sensing an easing in crypto generally, Bitcoin certainly, but even more so in alts that have done a reasonable amount in high beta. One of the alts I'm not generally technically a fan of, and I don't think fundamentally either, is Ripple. And this is what I've got to say for you around Ripple. I think it's going to be a spill to the downside on a head and shoulders on a smaller time frame. And I'm just going to remind you the bigger picture. But before I do that, this is actually the log scale. Just let's give you a real feel for the regular scale. This is as flat as a pancake. People think that's great. It's bottom. It's cheap. I'm afraid that's the rookie error. The fact that it showed no relative strength in our secondary echo bull market for cryptos, and now subsequently in the third mini echo bull market for cryptos speaks volumes. I'm going to take you back up to the log scale, but I just wanted you to realize how flat it was and how high it got spiked to 3.4. Actually, if you also just have a small peek to the left, I'll talk about that fractalization of a setup that was a precursor for overperformance for the original bull market, a nice HVF squeeze, and I've got the levels in there. You can see how that overperformed. Lots of money, hopium, etc. going in there. So understand that. And since then, since that big bull, it came down very brutally. In fact, it didn't stop coming down even after the others had bottomed. In fact, let's not do percent, let's do logarithmic. That's what we want. And we said we felt that the funnel level over here, the greens, and more importantly the red stop level, would eventually be invalidated. For HVF method, that's a big thing. That means the original bullishness has now been undermined and taken back, which is clearly a neutralizing of the bullish event, which is in essence a negative or a back step. So you could see support on the funnel over there, spike protection, very suspicious with volume coming back down, getting really low vol, warring, and then again a little bit of spike protection, less money thrown at it this time. And then you got a little fractal of an inverted HVF right there, sitting on what we also call a grind line. That grind line is that angled red dashed line that has occurred over there. And we said we suspected it was going to break that grind line, which had a small upside gradient where they'd been defending Ripple a little bit. You could see it there was the real battle for them to defend, and a little bit earlier they stepped in each time because they don't want it to get too close to the previous lows. So this smacks of insiders to me a great deal. And then you got that dip there, that break. That was a key break. That was now you're below the grind line, so it was no longer holding that marginal increase, low ascending defense point, and that had now fallen and fell into the funnel. And in fact, unsurprisingly, it defended it on our axis, returned to the grind line. It's this classic price behavior. It broke with momentum. It had, as I said, that fractal. You then got very low vol, you return move, then you ran the axis level with a dip, and then you returned again, this time quite convex to the grind line with a little pushback after running there, the very, very small time frame. So let's take not so much small time frame, but I'm looking at it in minor detail here, so I'm drawing with a magnifying glass. So let's say goodbye to the bull market and just show you a little bit more here where you can see it better. So this is kind of how it's done. So there was that little squeeze fractal that let go of what we considered was an important level. We're the only guys that'll have that line drawn on. Grind line theory, a case of its own. You had a little bit upside squeeze that led to the return move again, just run and fizzle. Then you ran the axis after supporting on the axis, and there's that convex turn around. Then you formed a little fractal in there. So let's just drop the time frame again further while we follow Ripple in its merry journey of unimpressing us very much. So rarely is it the outperformer, certainly. And I have to say, it's never given me cause to want to be holding it long. I might actually just go for the 12 hours and get a little bit more detail so that we can run with it. So yeah, so that was that spill over here. I've got the volume on, so I'll just pull the candles above that volume so you can see it. There you go. So a bit of volume, and then eventually it found, with the bull market of cryptos coming back, a constriction. Again, see that resistance level. This is our RL3 from the original HVF that led to the boom bull market in 17. That was forming a resistance after it was broken with momentum. Classic price behavior. You would have got a funnel there as well on the smaller time frame, and you had this ascending triangle that eventually broke with a bull market. You'll learn if you do a program about this that I've drawn here. It's not a megaphone. It's a hunt volatility funnel trumpet. We differentiate between megaphones and trumpets, and it's quite clear that they're very different. You'll learn what that means, but you'll need to do a program. Details in the course. Okay, so what's happening now? In this entire trumpet, the one key thing that happened is you returned to our grind line again. Only to fail again. So let's have a little look on the tighter detail here. So I'll lose the 12 hour. We're going to drop it down to a 3. Why not? Have a look at that head and shoulder that you had there, and talk more about that. So again, you had a little bit of a upside HVF. So 1, 2, 3, you got a little squeeze there, all coming along the midline and axis of our trumpet as well, by the way. You can't make this up. You get your break, you actually made your target. The target runs around there, and then you got all of this selling as you move to the grind line. You got a rising wedge for a right shoulder, which bounced on this key level of significance, the 27 law of round numbers, which was also just run by our little upside HVF here. So we're really understanding the detail of the price. No one else does this kind of analysis, guys. I'm sorry if that sounds arrogant. I don't mean it to be arrogant. We are wrong and we learn continually. But the key levels are there to be seen, and the pattern is one of the greatest gifts that throws down the key level. So that was essentially your feign and break of your head and shoulder, and it came with a very weak channel rally after a big sell-off, quite bare flag or ish. So that would have been head, that would have been left shoulder, and that would have been right shoulder. Slightly higher right shoulder, generally we prefer not, but a very ugly rising wedge that saw a vicious sell-off. So that gives a lot of momentum changeover. We run, of course, the funnel for the first time of this little upside the left shoulder, so that invalidates. And then straight after doing that, we get our bear rally with the bear flag over there, and then we start spilling. So that is a triggering event. This was the original trigger, and you got a bit of a bounce rally type return move in this flag-like fractal, which is just simply no good. Of course, you could also see the blow-off volumes on the heads, especially on that mega sell-off coming down there. So you went from a final blow-off volume here to your highs, which saw you at the grind line fail. That was originally something you were supported on. Now you're failing at it. You then get your big volume on the sell-off. You get your secondary volume again, also very big, into bringing you to the neckline. Just run the 27 law of round number, which was also the neckline here. We ran with this little micro funnels axis because we do head and shoulders in a unique way, particularly where HVFs are involved, and many times they are, but most people don't see them because A, they don't know what an HVF is, and B, they don't take a close enough look. So that amplitude gives you a head and shoulder. We'll run with our axis that's cloned to the downside. So you broke there, you would have eaten a bit of red. You should have had your initial stop there at the right shoulder. It was a bit high, but now you could, if you're entering now, you're late, but you could have the lower rally as a potential head and shoulder stop loss over there. So let's say goodbye to all of those scribbly, also beautiful little annotations. And remember, we're in log scale still, by the way, so it always makes percentage type look. If you have a look at it with a regular scale, you can see that it adjusts slightly. Not so bad, as obviously you don't have that huge bull market. But what am I looking to do? I'm looking to bring that target back into view for where it might take you to the downside. Let's get it a little bit out of that volume. Wait for it. How funny. The target gives you your low 3 of that original upside HVF just prior to the bull market that I showed you right in the beginning of the clip. More coincidences, I suppose, to the notion that there is any value to my method. Anyway, so over there, the flag like that, you got the secondary break on the flag. You could have traded the flag entry, you could have traded the neckline entry, and you wouldn't have had Hunt Volatility Trumpet to know that that was actually the trumpet break entry. You could see I tried to hang and then it spilled, and you have a target of 19,844. And you'll likely run both these levels, which is also round number 19.7. 19.7 from 27. 27 to 19.7. So that would represent 8, maybe 7 3/100 over 19.7 is quite a significant move. 7 3/100. He writes so badly. Most of you can't read what he's writing. Silly boy. Yes, indeed. 7 3/100. You can work that out for a percentage yourself. Essentially, 6 on 18 would be a third. This is over a third, so you're looking at about 35%. So it's quite a significant loss. You are, however, not getting at 27 because that's for my premium guys, and you can become a premium guy too if you want. And occasionally we do a free view after the event, like now, as I say, after the break event. Just to be clear, this is not advice. It may not make that target. Who knows what could be coming our way. But Bitcoin is certainly looking a little weak. We call Bitcoin the God market. So I will give you an update on Bitcoin as well. There's another alt as well that we have gone short. That's a different pattern. This, of course, was the head and shoulders with HVF on the left shoulder, plus the grind line theory, plus the previous funnel, plus the, you know, the Trump and everything else. We look for a lot of reasons for our trade, and we get a lot of justifications. You won't find this level, and each one is independent. It's not 5 different indicators, all mathematical formulas on price behavior or moving averages in different time frames. I'm so disappointed by the quality of people with huge followings and their reliance on moving averages as trade-based tools. It's absolutely worthless, lagging and useless, but nonetheless they continue. And boom, Bitcoin, let's just run the ruler on Bitcoin super quick. So there's a little a spill of some note, and we felt that was grinding. Now the only thing that hasn't happened is it hasn't run that low yet. It hasn't run that low yet. So again, what could have happened here? Well, you might still be in a head and shoulder here. Initially, you may recall we said, in fact, it's unlikely to be head and shoulder with this as a shoulder. This is a falling wedge, and you're likely to get a bump first. We got that bump. So as we said when we were watching this at the time, this might be a head and shoulder that fails. That was on neckline. You could see how nicely it sat there for the little bullish flag, leg up, the final one there after there. You can see that clearly the levels are, you were in a rising wedge here, so you could have got short in a rising wedge. There was also a broadening pattern. Again, you need to learn a program about broadening patterns to know how they do. That's called an ascending megaphone, different from a trumpet. You can find out all our definitions when you do a program. Sold with momentum, boom, down, here you come, zibbity zibbity zab, bouncing around the blue line, but you never quite had sufficient of a shoulder. This one didn't come down to be a shoulder, and this one did, but was very minute, and then rallied out of, and you had the contradictory larger time frame falling wedge that actually said you're squeezing and you're probably going to get a bump. So you got your bump, but this time, and you bumped higher than the previous shoulder. So that is left shoulder, that is head, that is potentially a new right shoulder where you never quite got one, except for this little spot here at the neckline, which is disproportionately small and was in the wedge and was squeezing, that led to the price move. However, once you get the slightly higher shoulder, which we generally don't like, but it was immediately taken back, we drew the rising wedge, and guess what? You got the slam down brutal. So the time frame for that shoulder was exceptionally tight. So we're okay with it being a little bit higher because it got an absolute slap in the face and went lower, where that is lower than even your lowest point in your wedge. Whilst this was a more broad shoulder and a lower volatile period. You can see once you first got onto the ledge, that's our neckline, till the point you got a little bit of a push up, moderate volume over there. you could see that that had bread. So this was a volatile shoulder. So when things are volatile, it might go a little bit higher, but it got absolutely monkey slammed on the way back down. Gentlemen, please. Learning with me the art of charting and see the whole world unfold before you. Okay, so a bit of a grind. We broke slight falling wedge. Instead of going up, you got slightly out of it and you got spanked down. It's going to be interesting to see if we run that level. This is not a strong Bitcoin price behavior. This is not echoing bottoming. This is echoing weakness. The highest volume on this current view that I have are both bear selling closes, particularly that monkey slam event, and even here your last three are red, and you're wearing red and it's coming off. So many people may be wondering, what of your big macro bigger time frame, 20k, 3.2k, 13.9k, 6.6k narrative? Well, it's quite possible that our magic level, and we're the ones that said 10.5 is going to be a key number repeatedly. We need to see it run, and it was run by $3 on that particular point, could become your RH3. In other words, you may have the variable for this final spot. It could be 10.5, or to be exact on Finex, 10.491. That's a 1, not a 7. So that would be 10.49. And you're waiting for that third low on our macro, probably I would say weekly or big daily continuation pattern. We might have wanted a little higher, but it's a decent shot, 10.5 to 13.9. Not half bad. 3.2 to 6.6 along the lows. Where will the next one be? My majority view is that we're going to be above 6.6 for this low. However, there's a small possibility that can't be discounted, and that says the following. So if we go back to Bitcoin and we go up to a higher time frame, what are we helping you with? Let's talk about it. Let's close the eyes. The eyes are mince pies, and do 3 daily. Let's do 3 daily. Do it 3 daily, Francis. Note the lack of moving averages except on the volume, just to see whether the trade of volume is going up or down. So the one thing that might be, and I don't think so, it's not my majority view, but we can't close the door on it. You've got to prevent yourself psychologically closing the door on things you don't think will happen. Anything can and often will happen, especially when you least expect it. You can already see it. It was a lot less volatile and up a move. Note the candle bodies. Look how small these were. Look how moderated these were. No super stretchy candles, particularly like those candles. Even on the descent here, on the sell-off, there was one fairly big candle on its own here, which was counter trend, and then was quickly taken back. But if we're talking about the up leg here, very low vol. What did I say to you? Third impulse will be lower vol, will work its way up and inch its way up. It will not be a, like all these people calling parabolas. Everyone's learned a new word because they follow one particular guy. Parabola. Everyone's running and calling parabolas. No parabolas on RH3, the third impulse of this setup. And that was the channel. We were the first to call that channel. And up it goes. So here we go. We may well be starting a down leg. And then it comes down to how low should she go. Well, we're saying we don't think it's going to run that 6.6 level to the downside, otherwise it's not going to comply. But there is one possibility, and this is the one I was going to warn you about. Maybe this was just a rally. I don't think so. I'm like largely ruling this out to a small percentage. I'm writing it down to a small point. Maybe this was just a rally in this down leg, and we get another down leg, and this down leg dips a little lower. And this is all part of a complex second move down. So you have your second high up top here. We call it relative high 2. And you haven't made your relative low 2 yet. You're going to make a lower one. And this was just a rally in it. Instead of being 6.6, it's going to maybe be 5.5, 4.5 or something. I don't think that's the case. I think that would. I think we've done more than enough of a rally here for this to be a separate, independent third impulse. So I think that's potentially our third high right there, and that is your relative low too, he says, scribbling like a child. But you can't rule it out. But this was, as I said, low vol, so I think you're going to actually have a fairly low vol descent, and it may start to get some support as well. It might bend and around a little bit. So we push, push, push up, and at some point find some form of basing in and around these levels. The reason I think this was valid is we had this huge volume by price when we did the analysis that all coincided with this very significant pattern. This was a very significant pattern, and I knew after, as much as you ever know anything, I certainly sensed on balance of probabilities rationally that this was going to be a key significant level for us long after we got the sell-off that we wanted down here. You pumped past it on the way up, but on the way down it served as support. And that's why I think we've got a legit RL too. But maybe this is just all a rally off that support and it's got to come down. I don't think so. It's done too much. It's already done too much. You've got to remember, you've gone from 6.6 to 10.5. At the end of the day, that's 4K. Listen to that. He's a poet and he doesn't even know it. So that's my story for you. That's Bitcoin. So Bitcoin to be easing, what's going to happen to the alts? Well, the alts are a bunch of bedwetters when Bitcoin eases. As simple as that. They're spineless jellyfish. They're all brave and puffy chested when Bitcoin is getting his club out. Then they're ready to fight and take on all comers. But generally, as a whole, the group, there's certain ones that have shown a bit of relative strength and a bit of spine, and there's others that are just perpetual losers. But I'm not a maximalist. I'm just telling you technically that's how it's been. There will come a point where that'll change, and then believe you me, I'll have new friends. So Bitcoin dominance is getting a little bit of clawback, but I don't expect it to go back to previous highs, because I don't expect this mini or micro bear sell-off period to extend very lengthily. But it might be worth showing you a couple of thoughts that I put down on Total 2, which is everything excluding Bitcoin in terms of all of this. This was a key level. These key levels, I put so many lines. Every time I hide the lines and I draw a new line, I end up drawing them very similar places. That means it's top bombing on my behalf. I think I might have found the target. Anyway, removes fluff from pen. And continues to draw like a child. So a lot of clear-cut support, but a weak rally, broadening, aka a megaphone with a bear pole, ascending megaphone that saw sell-off, and then essentially you got your rally to this point. That was your echo bull Mark 1, and that's what your pathetic alts did. At best they got to 23.6%. Remember, this is log scale. If you want to just be reminded how piffling an effort that was. Actually I lie, it is regular scale. Let's put it log scale. No, that's it, a bit better. So you saw on the previous view how flat it is. Now I've made it a bit bigger, and you can see maybe a bit more detail on all of this lows area. So what do we think has happened? Well, I'll show you. You got a similar ascending hunt volatility trumpet, which is a broadening pattern that's defined by us in our definitions and what it means. You shall learn on a program, but you can see that it's been drawn. You won't know much what to make of it. This volume is going up, but I don't trust the volume or the data on this thing. It just might be more of it is being captured and brought to you. So don't be easily fooled. I'm going to get rid of the huge bull market that is disproportionate. So it's kind of like a bad low, double bottom. So essentially you were there, you weren't too far away there, and this is clearly for me some form of a neckline. You got resisted at the first sight of this neckline, and I think that's it. I don't think you're going to come back and run it in this particular bull move. I think it's possible when we have our Bitcoin mooning that you'll be permissioned, and then in fact the beta of the alts will once again outperform. So that'll be a time to have those that have shown relative strength in the weak periods as your leaders, and I would still stay within the top 10. You don't have to go penny stock hunting. Everyone, when they first start trading in equities, I had to stop them from penny stock hunting, wanting to buy a 2-cent stock that will one day hopefully be £100, $100, fill in the missing number. That's not how you make money. You choose proven winners and they go on to win further. it's sad to say, but all your oligarchical control structure monopolies such as Amazon and all of them, buying them at $100 would have been a far better deal than penny stock hunting. But people are people, and they always want to buy lows, and they forget there's reasons why lows are lows. Okay, so you might have that W bottom. The other technical element to this is that is actually marginally higher, and what you may also end up getting from the alts as well, in the same way as we are forecasting from Bitcoin. That's a terrible line. Let's try it again. I could even use the straight line function. Why not? Is get a further squeeze functionality type set up like that, which will then eventually lead to the blast through of this level as part of that big crypto bull that, despite being called eternal pessimist, we are in fact calling. So that would be something like that, and then that would be the run. So something for you to think about as well. So it doesn't only have to be a bad W double bottom type, not quite the double. It could also be a continuation pattern, first in a new trend, and we talk of overperformance in those instances, which could see very strong melt up capability for the total. Let's drop a timeline. Let's drop the timeline and go into the great unknown, the unknown. So there's that broadening. Let's get it a few hours, drop it down, keep dropping. We go to 12, let's see what we get. So there's the fact that the volatility is increasing in this move, and that you've essentially come to within a couple of hairs breadths of key levels that we determined were relevant before. It's in and around the 115 to 120 billion market cap level. When I pin that tail on that donkey with blindfolded, I keep pinning it between that 115 and 120, and that's looking at the historical price behavior billion. Don't forget there's been some new coins added. Isn't it interesting to see the observation of that lower ascending basing line? That's what they're called, and of course the many touches along the capping line over here and here, and then the subsequent failure of that. You could have got in early there, and you want to ask yourself what structure is in there. Yes, you could be doing this. You could be seeing all of this with all the friends in the community, all your smart guys. I've got a lot of tech guys and engineers, well, lovely guys in the community, and they've all spent so that they can be surrounded by good quality people doing smart things and getting early to the trade. And you could be one of them too, but it doesn't suit everyone. Anyway, so that structure is very much the ones we like to see, and of course you could have got early in on that. So hence why we've been saying, although I've only started mentioning it publicly, others need to get their positions on in their favorite alts, why we think that's been what we call a slap in the face event type, and as a result it's a trend changing event as well. You get a continuation pattern. That is the first continuation in a downside. After getting a proper slap in the face, you pushed your luck with a girl, you weren't ready yet, you hadn't charmed her enough, and now it's all gone tits up. Excuse the phrase, nothing to do with what you might have done in that bar while feeling a bit tipsy and taking in her fine anatomy in all senses. But nonetheless, slap in the face is the phrase I've gone for, and that's going to stick. And it's a trend-changing event. So that means you are now got a new trend, and you are getting a continuation in a downside. First in a downside can overperform. So hence why we think you could come back down, which could tally up with that triangulation, which could give you a symmetrical triangle stroke HVF, hunt volatility funnel upside. It could see you eventually smash this after selling off. So while I'm being bearish, I am not a perpetual bear. I'm telling you bear for now. I will be trading short Ripple and one other. My community knows. You can find out. See you on the other side. Links below. Thank you for watching, and God bless you all. None of this is advice. It is just a madman ranting into the ether world about his musings on price behavior in the crypto market. Bye-bye for now, fellows.